Hello and welcome into the KE Report. Shad and Corey here as your host, and we're getting an update today on Scottie Resources. Scottie Resources is traded on the TSX.V under the ticker SCOT and on the OTCQB under the ticker SCTSF. And I'm joined today with the CEO of Scottie Resources, Brad Rourke, and the president of Scottie Resources, Thomas Mumford. And Brad, Thomas, great to have you guys on the show as always. Brad, I'll kick it off, throwing it over to you to talk about the long-awaited news that you put out to the marketplace about your preliminary economic assessment, your PEA at the Scottie Gold Mine Project. Now, this has a lot of components into it. We're going to dig into those, go around the horn here. But just from a high level, this is a big milestone for the company. You've wrapped some economics around the project using the direct ship ore DSO model, as well as the potential for toll mining, but also the potential to do both of them. But just from a big picture standpoint, you've messaged to the market now, Brad. What do you want people to take away from the PEA from a high level?
Hey, thanks, Chad. Yeah, I'd like to point out the long-awaited PEA. We only decided to do an MRE just a year and a half ago. So we've done an MRE and to PEA in a very short period of time. So we're excited to give people an idea of what the numbers look like, both on the DSO, which is our main objective at this moment, but then show, that there perhaps is other alternatives out there. Getting that bulk sample done was a big feat for us. We only got that permit in July of this year, and that is sitting down at the dock as we speak. We're just finalizing exactly how we will send that away. So a lot has happened in a very short period of time from our first MRE to now here's our PEA, bulk samples done, and then on top of that, the largest drill program to date, of which we've put out, I think, 3 news releases on drill results and kind of business as usual. We're happy to see structures holding in and give people an understanding that, this is under drill and we can add ounces, but the base case that we're making right now should give people good confidence on where the floor might be with Scottie.
So, Thomas, if we dive into these numbers, just even a quick glance looking at that table one that compares the direct ship ore base case to the toll milling option. And yes, we do need to note that there is no toll milling agreement in place, but at all these metals prices you break down, the numbers are good, but the numbers actually look better for the toll milling option. So can you give us the lay of the land of how you weigh the DSO? And as Brad just said, you're leaning towards that, but toll milling looks like it could even be more profitable.
Yeah, absolutely. I mean, it's pretty clear from those numbers that toll milling has a notable improvement with the gold price increasing along any of those vectors. The DSO allows us to be independent. It doesn't require ASCOT succeeding or restructuring or anything. We provide ore, and whether we go DSO and sell it to a metal trader to blend it and put it through a smelter, or we sell it to ASCOT to toll mill it, it doesn't really change the trajectory that we're on right now. The economics of the ASCOT are certainly compelling, but the DSO sets a base level of what this project is worth. That is our fallback. That's our safety position. And that's what we're working towards right now.
Well, and Thomas, just following up on that, they don't have to be mutually exclusive. You actually could have a scenario where if Ascot does turn things back on and has the capacity, you could split the loads and have some in both camps. So maybe speak to that optionality.
Yeah, absolutely. So, the question of toll milling is just capacity on the ASCOT side, whether that mill can take our feed. Like our assumptions are that it's going to be a struggle to fill that 2,500 ton per day mill. I mean, as a DSO project, we're looking at producing about 500 tons a day of actual product down the road. I mean, we could optimize that and increase that depending on how you use the ore sorter and what your grade cutoff is. But at the end of the day, it's capacity on that side. So if they only had capacity for, let's say, 200 tons a day, I mean, we can ship the other 300 tons via DSO. And we could optimize the pay structure based on the payability that we see on the DSO terms versus whatever the toll milling terms are. So yeah, it doesn't have to be black or white here. It could be some middle ground. And, really we need Ascot's mill to be turning for a toll milling scenario to work in our favor.
So on that DSO front, let's talk what the risk profile would be here and how locked in the costs are. I know that you can't share all the details on what that offtake agreement is, but what would some of the variables be in that DSO base case that would change some of the implied costs to your production and what you would get paid then?
Yeah, so some of the variables on the DSO would be the cost of shipping, and then the long-term TCRCs, which is a treatment charge for copper smelters. So there's a bit of variability in our contract with Ocean Partners. Now, right now, the TCRCs are actually negative. So, and the foreseeable future here, the next couple of years, it seems like they'll likely remain negative or around zero. We don't see a big appreciable jump in the TCRC, so that's not a huge risk for us. And shipping prices have been relatively constant from the area that we're looking at shipping out of. Other than that, like we're locked in terms of this offtake agreement. Like we know what our gold payables are. Like we have a sliding scale of based on what the gold grade is on what we get paid. The way it works is we load up a ship, it sails, and 5 days after it sails, we get 90% of the provisional value in that shipment. And then when the ship crosses to the other side, they resample it there and we sort out exactly what the shipment was worth and we get paid the remaining 10% at that time. So, it's a low working capital situation for us. It's a risk reduced. I mean, we're paid 5 days after the ship sails. So not a lot of variable costs, but there are a lot of costs associated with shipping. I mean, you got ore handling, you got shipping, you've got port of call fees, you've got blending costs on the other side that are built into our offtake agreement. And that's what causes the differential between the toll milling and the DSO largely.
Brad, I think this would be a good spot to also highlight the partner that you have with Ocean Partners, but also that you've recently appointed Brent onto the board, who is the CEO of Ocean Partners. So maybe just talk about the strength of that company. You were showing me some photos when we were in Beaver Creek together of some of their facilities and how impressive it is. I think people that are not familiar with them, maybe just speak to the value you have in a partner like that.
On the onset here, dealing with them for the last year or so, and I had a little bit of history with Ocean Partners years ago when we were looking at concentrating the tails in that cleanup. So that was the initial relationship. But over the last, for most of 2025, it's wonderful. And because they've made such a big commitment, they're our largest shareholder now, over 10%. They got a board seat, and we were pleasantly surprised that it's actually Brent that's joining the board. So very, very competent group, offices all around the world. One thing I'd like to point out is, we've got this DSO scenario. That's what we've worked towards, in 2025, just to kind of put a floor to the price of gold. But even with our relationship with Ocean Partners, they recognize that what is best for the entity Scottie Resources. And, we've got great terms on if we pivoted and didn't do a DSO or did a hybrid like we spoke about before, they are in full support. And being our largest shareholder, they win either way. So to have Brent on the board is fantastic. His contacts around the world is a different network than that we currently have. So there's a lot of benefits there. And then if you just look at what Ocean Partners is doing worldwide right now, that they certainly believe in the sector and deploying money in many different places. So I think we couldn't have a better partner there.
All right, I want to talk about the resource here and what plays into actual production and payable ounces. So Thomas, maybe take me through how these numbers translate over to the PEA, but then what growth we could see. Because right now, current resource, little over 700,000 ounces. In the production scenarios here, the payable ounces are a little under 500,000 ounces, and you're running a mine life that is about 7 years. So what's the possibility here of bringing some of these other ounces into the mine plan, finding new ounces, expanding on the overall actual payable ounces to either extend mine life or grow production in the current mine plan?
Yeah, I mean, there's a few questions there, but let me start off with, we pushed out our first resource at 700,000 ounces at 6 grams a ton, 6.1 grams a ton average, because we weren't getting any value for the discoveries we were making up at site. And we saw this short pathway to production and wanted to get valued on those ounces. And more importantly, what incremental cost will be for an additional ounce. And so what's the value of adding more ounces? And I think this PEA is really our major step forward in that and saying, this is how much this many ounces is worth. And we think we can find this many more ounces. And this past season, we are really focused on converting the existing resource from inferred to indicated in order to get it into a feasibility level study. That's our next step in this progression. And to have indicated, we're converting from inferred at this point. Our conversion from the inferred into the mine plan was pretty strong, actually. It's about a 70% conversion rate into there. And those are high quality ounces that we're adding in addition to that. If you step back and you say, how many ounces is this project going to show? I mean, Brad and I both believe that we're going to find a couple million ounces with continued drilling. I mean, we've under drilled this thing. We have not tested nearly all the targets that we have available to us. And where we have succeeded, it's basically been mineralization that occurs at surface, and then we keep chasing it down deeper and deeper. And that's how we got the first 700,000 ounces. And we see a pathway to keep growing that. We've got high priority targets where we're going to basically increase the resource through resource expansion. But we also have real exploration targets like C and D that aren't even in the resource, or Domino over on the other side of the mountain, which we think has, that's a game changer if we can show that we have a wide enough mineralized structure on there to build into the mine plan.
Well, Thomas, just building on that a little further, I mean, there's also the new Wolf target you guys just found at the Scottie Gold Mine area. And yeah, the C and D veins aren't even in there yet. There's also other veins at Blueberry that aren't in there yet at the Blueberry contact zone. Just to remind people listening in, you just completed a 27,000 meter drill program, the largest one of the company's history. And a lot of those results, we haven't even gotten back yet. So the resource estimate that you have and this PEA are both snapshots in time. What else can you tell us about what was drilled this year and how that will build into any future resource updates?
Yeah, so the drilling this year, I would say 85-90% of that drilling was really focused on the conversion of inferred to indicated. With the caveat there is that these holes, the way they're oriented, if we extend the holes, we extend the possibility of finding additional mineralization in the siltstone side of the contact. So the primary goal of almost all those holes was to set up pierce points to convert inferred to indicated, but they all, had additional lengths added to them to expand the resource into other vein zones on the siltstone side of the contact. In addition to that, the other 10 to 15% was exploration drilling on targets like the Wolf Zone or the P Zone. Those were the kind of two major ones that we really targeted this year that will have upside on that. And they're both heli accessible targets, so they were drilled kind of mid-season. So those results will be coming here in, roughly a month's time. We're still releasing results that are coming from the skid drilling that we did at the start of the season. So normally we start with skid drilling, then go up to helicopter drilling, then go back down to skid drilling as the season progresses.
So, Brett, let's get you back in here more for corporate strategy standpoint. This is a PEA, right? So early stage economics, but it's showing a very profitable operation, whether it is DSO or toll milling or a combo of both. But it is still just a PEA with all the drilling you're going through and all the expansion potential. Is there a certain time here where you more focus on just getting this into production, dealing with the here and now numbers rather than continuing to expand and grow on the other side of things?
Well, I think that's actually what we're doing right now, even though we do get to expand double duty on some of these holes. Everything we're doing right now is so we could be in production, get that open pit material to be able to sell, whether it goes to Asia or wherever it goes, because then there's no equity left in the company. We can fund the rest of the project just with that open pit. So everything we are doing is we're pushing towards that goal of production in 2028. And, it's ambitious, but I don't think it's unreasonable. We're working with the best consultants that have familiarity with the area, did the permitting pathway for ASCOT and such. So we are. What we're doing right now is not focusing on expanding, even though we're going to get some of that, but it is totally to be able to sell ore in 2028. I don't think we could do anything more to quicken that time cycle to production.
Well, and Brad, another component here that we've talked about is that you're not going to do a PFS. You're going to go straight to the feasibility study. Maybe unpack why that is and how this is actually a higher confidence PEA you just put out, but then all the other de-risking work you're doing, including things like ore sorting to upgrade the ore so that you have higher grade material that you'd be shipping. There's a lot of other initiatives here that'll feed into the coming feasibility studies. So give us a timeline on all that de-risking work and when we'll see the feasibility study.
That'd probably be better for Thomas. Thomas is working closer with Sean than I am. Yeah, I mean, I know what the canned answer is, but Thomas, you might want to add to that. Feasibility
Sure.
in 2027, I think, is what we kind of outlined. But
Yeah, so When Sean came into the project, we both sat down and went through some very healthy discussions on what is the rate limiting steps in this whole process and trying to figure out from a regulatory roadmap what is the permitting steps that would mirror that from a construction point of view. And so we came up with basically a plan on how we can get this to production as quick as we can. And the rate limiting steps in that are really the resource conversion and the baseline studies. Those are the two longest lead time items that we have in the project to get it producing. With the way that it works is the conversion of inferred to indicated. Really, there's not much sense in doing a pre-feasibility for this project. The engineering is quite simple. If you do a pre-feasibility before you've converted your resource, your pre-feas is going to be smaller than your PEA until you've completed that conversion from inferred to indicated. So really no benefit to the company or the market. So we're doing basically a slower feasibility. Like we're going into a feasibility and we're going to build it out. So any of those kind of trade-off studies that you would normally discuss in a pre-feasibility, we'll be addressing those early on in the feasibility and then going into that. And the timeline for the feasibility is estimated at 8 to 10 months in total, with the caveat that we need to wait until the drilling from 2026 is completed before we can release this thing. So we'll be rolling into the feasibility here very shortly. The other big questions that we want to answer with the feasibility are, around metallurgy, which would be more in tune with what a toll milling situation would look like. The geotechnical, finalizing that, getting a more detailed mine plan and estimates on that, starting in quotes. It's a simple operation up at site with a camp, with a sorting processing facility. So we just get more quotes on that and more detailed engineering done on it. But it's not a tremendous amount of engineering. It's a lot of permitting, re-permitting the old Scottie Gold Mine, finishing the baseline work, and the drilling associated with the resource upgrade.
Well, Thomas, another thing we're hearing, especially after kind of debuting this PEA, is some concern from some investors about the haul road down through Stewart. And, if you're bringing all these big trucks through there, the logistics of that, could you maybe speak to that? And as far as putting it in context with what other companies had proposed on the same road?
Sure. I mean, we're projecting here with a 900 ton per day throughput for the project. I mean, we're stripping out half of that. So we're shipping, 450, 500 tons of material down the road a day is kind of the volume that we're looking at. You run 40-ton trucks, you're shipping, that's 10 to 15 truckloads a day of material that are going down the road. We did over 110 truckloads this year for the bulk sample going the road with no problem. So that's a good analog when we did that over about a week's period. So we were kind of doing similar levels of trucking this year and was without problems. I think if you look at SCOT's, for instance, their feasibility study of moving the material from Red Mountain, they actually go up the road the other way and they go through the town of Stewart. And if you take 2,500 tons a day and you run it with like a 40-ton truck, you're looking at 62 trucks a day. So I think other operations in the area are conceptualizing, significantly more trucking through that via the opposite mechanism, coming through from the south versus the north. I think ours is totally manageable. And I think, it is a concern that it is a municipal road and there are tourists on the road, but we've come up with a number of plans on how we would mitigate those risks and work with the town of Stewart to make sure that everybody gets what they want here.
One other aspect we always have to ask about when you're talking about moving into building a mine is funding. Look, the stock has done quite well recently. The market cap has raised to, I believe, around $100 million Canadian. Initial capex for this project is only about $128 million. So I say only because that is a low number for building a mine, sustaining capital of $76 million. Brad, what would be your strategy to raise the money, or really just how would you fund this build?
I don't think any different than we've done in the past, Corey. We've got very, very strong shareholders that have stuck with us for a very long time. And I think you could look at the potential of one more strategic in there, maybe on a financial end. And again, for the next, let's just say the next 18 months, I think a lot of the financing internally, that dilution will go to people who already own shares. And so there are discussions with that. We are healthy right now from our treasury is good. Yeah, so funding next season, it doesn't seem to be an issue for us in our heads right now. It's just a matter of, all I'm worried about is dilution, guys. So, for the next 18 months, I think we're pretty good. And we'll put that out to the market when the time's right. But, right now money seems to be quite easy to raise, but I think internally we're getting a lot of interest just with our big partners right now. So they see, we finally hit to this stage and they've been waiting a long time. So we'll see what kind of support they might want to do in the future here.
Well, and Thomas, another thing we should touch on here in this discussion is the bulk sample that the company's engaged with. That's a way to generate some non-dilutive capital, learn a lot about the project, test the recoveries. There's a lot going on with that. For those that have not been following along or have only casually followed along, give us an update on where we're at with the bulk sample, what you think that could generate as far as the end product, and does that bring in some capital to the company as well?
Yeah, yeah. Bulk sample went really well this year. That was a new thing for almost all of us to run this. We got the permit in late July. We're blasting the following week. We moved about 4,500 tons of ore in total down the road. So the process really was blast, muck out, separate ore from waste. We had a geologist just up on site, just kind of with the excavator working, separating the two. Then we crushed it with a jaw crusher up at site, and then we trucked down the jaw crush material. Then you went through a cone crusher and mixed it together, and then it's sitting right now in the warehouse, the bulk shipping facility in Stewart, BC, and about 4,500 tons of material there. And we've got assays out. We're estimating the grade of it and starting the sales process to see where it goes. In all likelihood, it would probably go to Ocean Partners, the people with the existing offtake agreement, but that bulk sample was specifically excluded from the offtake, so just need to make a few more confirmations there. We're going through the technical portion of it where you basically need, to identify what type of material and get that material essentially registered with the Transport Canada in order to be able to ship it out. But we're hoping this month to have it shipped out, but maybe more like next month now to get that product shipped out. What we get from it is it's kind of a mini run of our DSO model. The only thing it's really missing is the ore sorting. The bend vein that we targeted for this is high enough that you don't need to do any ore sorting. It's well above 10 grams a ton. So yeah, we're pretty excited about it. I think it'll generate, north of $5 million in net profit once we get the all said and done. So it's a great economic boost. It's a test run of the project, but also we're going to get additional information from a technical point of view. So we've set aside samples along the process for ore sorting, for additional comminution testing, understanding the crushing a little bit more to figure out how much fines are generated from it. So getting a lot of value from having this bulk sample happen.
So Brad, wrap us up here. There's a lot going on with this company in terms of now even having the PEA out, but all this kind of production related work that you're doing and still the exploration that we're waiting for a lot of those results. What does news flow look like through the rest of this year and into next year? If you could just summarize that for us.
Sure. So I think that bulk sample information should be very good for everybody to see. We also have the feasibility level ore sorting study, so a full run on the ore sorting, so not a desktop. So that should be before the end of the year as well. On top of, we have over 20,000 meters that we haven't seen ourselves, so there's more drill results than we've ever been able to put out, along with the information I just said. So a lot more catalysts and then perhaps a regular exploration company for sure. So we've kind of turning a corner, and yeah, and let's see what those results are going forward. They sure have started out okay, but understanding for us, when we're going to this indicated level, I believe the influence of the other high grade hits didn't compute as much as you'd always want to. No one is ever happy. But I think what we're seeing initially here is that structure is holding in very well, and people can start imagining, what happens when we do another 30,000 next year on the same structure and add all these new numbers. Because again, a lot of the numbers that we see now on the MRE and such is from 2024 drilling. We haven't seen 20,000 meters. So yeah, I think people can imagine this. We put out these base numbers. It looks great. Should give people a floor to what our company's worth today, what value we offer. And then, I mean, we're just like an exploration company. We can expand. So, we're not cut off anywhere. So I think it's exciting with the drill results that come out and give people a little bit of a view what the future could hold. So lots of news, lots of catalysts and good partners. So we're in good shape and a good gold price.
All right. Well, on that note, I think we'll wrap it up, gentlemen. Lots of catalysts going on for Scottie. Lots of different studies coming out, from the bulk sample to the ore sorting to drill results to all the de-risking work on the project. So there'll be a lot of news flow coming out of Scottie Resources. So for those of you listening in, definitely click on the link below in the show notes. It takes you right over to the Scottie Resources website, straight to their news section, where you can sign up for updates that hit your email inbox, or just follow along with the news as it drops. I'm sure we'll be chatting again, gentlemen, with all this going on in the company. And it was great having you on to unpack the PEA. Congratulations. It's a big milestone for the company, but it is just a snapshot in time. So we'll keep watching as things develop at all of the different projects underneath the umbrella of the Scottie Gold Mine Project. And as always, looking forward to our next conversation.
Thank you.
Thanks.